Good morning, guys. Can you guys hear me? Alright, looks like we're live. Alright, let's get into the market. Okay, let's take a look at what's happening here. So SPX, not gonna delay. Yeah, not gonna delay. Let's get right into the charts. So 4-hour pandemic trend line, that's been holding us up. Last time we saw the bounce was right before the the beginning of the ramp in November. Then we saw another bounce January, end of January, the pullback, bounce from there again, and now we are seeing another bounce from there. However, do remember 4 hours, the chart is still in bear's favor. 4 hours, if you look at this, lower low, yeah, lower low, equivalent, somewhat lower high, lower low, higher high, lower low, lower high, and now the bears are strong this morning pre-market. Very strong. Now this trend line, what we're seeing here right now, is the previous channel that we've been in for a long time before the January pullback. So let's see how other reaction looks like here. We did see a bounce from back here as well. I don't imagine this trend line to be that strong anymore though. So it used to be a strong trend line. But pre-market bear volume seems relatively high for pre-market. I don't imagine this will hold. If it does not, we'll be looking at the bottom of the key zone, which lines up with a 0.5 Fib retracement from this last bounce. Ideally, you want to see a hold of that, the 0.5, with the lower part of the key zone, which now that I look at it, doesn't look that strong. So if we were to trace back to the GP, this would actually make more sense. You can clearly see resistance, and then support, support, resistance again, and support. And even support back here. That would line up with GP. So depending on how long this takes, let's say it's the next candle. That still wouldn't really make sense. But GP, ultimate must hold for bull plays. Right now, 4 hour is still in bear favor. The trend is in bear's favor. Daily, bit messier. So whenever you see, again, reminder, if you see the charts messy, if your chart's messy, if my chart is messy, either one, that means market is choppy, market is in bearish direction. Less trades. Don't force your trades. Let them come to you. Make sure you find those golden setups before taking entries. So even the daily, this could very well just be a lower high that we have made on Thursday. Not Thursday? No, Monday. Monday could very well be the lower high. And now that's why the GP must hold. If we lose a GP, we lose this pandemic trend line. We're likely looking down at the GP from this last January bounce. This January run, GP will be down here. Most ideal entry Again, we are still in bear trend. Most ideal entry would remain down here, the back test of the 2008 trend line. So be patient. There is no rush in getting into anything in this type of environment. Morning, guys. Anyone got any tickers that you want to be reviewed? Make a comment. I'm gonna take a look. Looks like no one's up on our trading community yet. All right, let's take a look at NAS. So NAS has been the one that's been dragging us down on the market. And we're already at the 0.5. Slightly lost it already. Looks like we're bouncing from the 0.5 right now. Bulls trying to hold the 0.5 FIB retracement. GP, we want to see that hold. NAS still weak. Even the bounce that we had last time did not outweigh the bounce from before. So essentially, it is a lower high, and there's a potential that we're gonna go look for that lower low now. If that is the case, so remember, always have both bullish and bearish in mind. Bullish and bearish thesis in mind. We have already broken the on NAS. We've already broken the pandemic trend line. We're trading under it now. So NAS is clearly weaker comparing to SPX. And let's take a look at Dow quickly. Sorry. Yeah, if you got any ticket requests, put it on. I will circle back. And Dow looks okay so far. We lost this previous high ever so slightly. Then they got bought up right away. Coming back into the channel. So weakness is starting to show on Dow as well. Quick look at the bond yields. Now trend has reversed on the daily. Likely reversed. We're going to need to make a lower low for confirmation. But right now it looks like it's making a higher low or a lower high. VIX popping over that trend, that upper trend line of the wedge again. So be cautious. US dollar is signaling more bearish market to come. Oil still in the nice uptrend. Morning JJ. Good morning DG. Nice to see you guys again. Bitcoin recovering a little bit. Remember, it is a monthly bull flag that we're looking for. This could take a couple, if not 3 months, 4 months to work out. So be patient on your Bitcoin entries. We are extended from the monthly 8. All right, let's take a look at what do you got there? Zoom. Selling Zoom yesterday with the bounce of with the limit order. That was a bit too high. Now it looks bad. Oh yeah, Zoom was you had to pay attention to Zoom yesterday. This was a bad candle. I believe you had another ticker request too, right? PODD was it? Let me know. Anyway, so Zoom, bad candle, huge bear volume. Now on the daily, it looks extremely bearish. If you look on the hourly, I think I covered this yesterday. It was a 5-minute algo sell off all day, so it's extremely bearish. Now, and this is what I mentioned. You know, a gap up is generally for selling. Generally, it depends on the situation. So if you look back at QS gap up as well as FSR gap up, and there's a couple other examples, I can't remember which ones, but gap ups are generally for selling, not always. It depends what's causing the gap up. In this case for Zoom, there's no reason for it. It was a market wasn't even up that much. Zoom was gapped up quite a bit. Versus, you know, QS was news caused. FSR was purely technical driven. If you look at the chart on Zoom, what's a justification for this gap up aside from decent bull volume with a slight upper wick? It didn't, when I look at this chart, it didn't really justify the gap up for this, and we're gapping up straight into previous resistance zone. So I'm gonna have to redraw this zone, but let's see, would this make sense? Yeah. I still think over here. Yeah, okay, that looks more sense. So you're gapping up straight into the key resistance zone. You can see previous rejection or gap down, run up, rejection, rejection again, and this is rejection from the lower zone, and rejection unable to close over this previous resistance. So you're gapping up into the resistance zone with no news. Ideally you wanted to see, of course, another day of running, but even so, you would still be looking at a bearish divergence. So let's say we made a new high, the RSI would still be lower. That would still be a bearish divergence. And that's why when I looked at this chart, I decided not to play it. The chart, the technicals, the charts, it didn't look like it's set up ready to go. I mean, there were decent opportunities for gap up, which you got. But you always want to remember why you entered the play. In this particular case for Zoom, you look on the already, the day before, very strong, right? It just, was it 15-minute algo? 15-minute algo all day. Bull flag, confirm, bull flag, confirm, bull flag towards the end of the day. And then the next day, gap up. That's your profit taking. Now that you missed it, it's going to be hard to find a decent sell. I hope you're in comments. But 5-minute algo all day yesterday, sell off. Complete sell off. There is no divergence that I'm seeing. There is a potential for a bullish divergence to form relatively soon here, because we got to, on the 5-minute, shorter time frame, we got to the oversold territory. So if we're to make a new low this morning, you could be looking at a bullish divergence on the short term. Problem with it is still on the short term, so the balance could be relatively weak. On the daily, it's unfortunate, but it's going to be one of those cases that you have two options now that you missed yesterday's sell opportunity because of this big bearish engulfing candlestick. Two options that you could do now. One is, of course, depending on what you're holding. If you're holding commons, you could always think of just holding it as long as this key 365 holds. You can see previous resistance again, support, triple support, another triple support. So this is a key price to hold, 365. If you're in commons, remember to stick to your stops. If it does start trading under 365, stick to your stop, respect your stops. There's a reason why you put it there, because now what could happen from here is, we lose the 365, come back down to backtest this previous key zone, and then they just bounce straight from there. But remember, no FOMO, no greed, don't trade on emotions. Respect why you set the stop there. The other option is you could, depending on how long you want to hold it, again, if you're in commons, stick your stop to, actually no, this is not even a key zone, this is just a gap fill. So yeah, 365 should be your stop, because once that's lost, you're looking down at 331, and then if this gap previous support is lost, you will be looking down at about the 275 zone. Based on this candlestick and the volume, I would anticipate further downside to come. All right, let's take a look at a PODD. So I was looking at this yesterday when you requested it, but because it's YouTube videos, so I can't really say, just jump on and make another video about it. But what I'm seeing from here is an ascending megaphone pattern. Very easy to tell. There's two trend lines: upper trend line, lower trend line. You can see lots of support on the lower trend line, lots of resistance on the upper trend line. There's multiple attempts, 2 attempts to close over it, but unable to close over it. This was a beautiful entry right here. Look at it. Key zone, previous resistance, support, and didn't do much here. Support again. So this was a key zone. And then if you run a fib from this run, now sometimes it's going to be hard to determine, but remember, you're looking for those confluence areas. So if you run it from down here to the high, the last rejection, this key zone lines up with his GP. And it also lines up with his lower trend line. So this would have been amazing entry. You could have got it off, got in the entry probably pennies off of the bottom. What did we get to? 244.02. Yeah, my entry would have been. Oh, we didn't touch the trend line. If we zoom in closer, we didn't touch the trend line. But GP says 244.16. So, my first entry probably would have been around 246.83. Doesn't matter if you don't nail the bottom. $2.60 off, 70 cents, but whatever. It's this was a beautiful entry. From here, low bearish volume yesterday. I want to call this an inside bar, but it doesn't look like it. It's a little bit lower than yesterday or Monday. Yesterday's candle was a little bit lower than Monday's. There's nothing exciting on this. There is, let's see if we can do this. So it's up. A slight bullish divergence on the daily. So this may take some time to play out. Right now on the hourly, anything exciting? Choppy. How come there's so little candles? 1, 2. This is very illiquid stock, hey? Very illiquid. So be careful on your trades. This is what? 17.5 billion market cap. Why is it so illiquid? No one trades it. Look at all these dashes on the 30-minute. When you see dashes on 30-minute, an hour, the longer time frame with a dash, that means very irregularly traded. Generally, it's okay to see it on a 2-minute or a 5-minute. See, there's just dashes everywhere. 15-minute, you should start getting a little bit concerned. This one has dashes on 30 minutes. It's gonna make your trades a lot harder to get in or out. So think about it this way. You're trying to sell. You see the last price at 285.06. You're trying to sell. There's no trades placed until the next candle. Not even a candle. Next dash. You're already looking at 282. Now that's like a $3 difference. So when trading a stock that's with illiquid, just not many people trading it, just know that you're buying and selling. There's going to be a margin of difference purely based on the spread and what the price is, the way that they gap. So be careful on when you trade PODD. But nothing exciting on the hourly yet. Spiking bull volume, spiking bear, choppy action. Wouldn't really want to trade it. This was a beautiful entry. Seeing a little bit of a lack of follow through right now. All right, let's cover some of the hottest tickers. BTC, I think it's bouncing. Yep, slight rejection now. Oil still bullish. Dollar is rejecting from this previous pop. Potential inverse head and shoulders. Wait, no, that's negated already because we already made a higher high. So trend has already changed to bullish. We're gonna want to see where this higher low is gonna set. Looks like we're bouncing off of a 88 right now and previous support zone. Could very well just continue to run, especially with the market still being in bearish trend. All right, next one, let's do Tesla. Still interesting. I would still be interested in holding Tesla. There's no major red flags yet. Now, if you consider how much we've ran, well, it depends where you look from, but let's say from the last run. Let's do it from here. We still haven't lost a GP yet. We haven't lost a 0.5 yet either. 0.5 would be around there. Yeah, so this is a key zone to hold. Most ideal entry. Wow, this actually looks really nice. So if we continue to go lower low, lower low, of course, bulls don't want to see that because there's a key trend line to hold that we bounce from, the 0.5 to hold, the key zone to hold, and another key zone to hold. But in the case that we do continue to make lower lows, let's see if we can find a zone from back here. Resistance, support, support. Yeah, this somewhat makes sense. This actually makes more sense than back up here. Yeah, most ideal entry would actually be around that 576. There's a chance that we're going to pull back to the 5s. GP, key zone, channel, bottom of channel trend line. So let's say 1, 2, what is this? Mid-March. So be patient on your entries, regardless of what entry you're looking at. Mid-March, we could be looking at 500 some in Tesla. That would be an ideal entry, triple confluence. And I guarantee we'll be taking that position if we ever do get there. Oh, that would be an exciting entry. 500 some. 500. Yeah. It's like buying Tesla at nearly half the price, eh? So be patient. We are still rejecting from the 88. No rush on your entries. All right, next one, PLTR. Still relatively weak, but we are still seeing decreasing bear. We discussed this yesterday, so I'm not going to go into details. Let's do give me 1 sec. I'm trying to pull up the hottest tickers. Rect, did that. GME, let's do that. NAS is currently bear flagging on the 5. That's interesting. GME looks like it's actually basing off, potentially forming a bull flag. Decreasing volume, you don't really want to see decreasing bull volume on the bull flag though. So 1, 2, could be another 2 more days. Let's see what the reaction is at that 88. This is very interesting because we are basing off again. Similar but opposite to the last time we based off. This was a bear flag, based off, and then popped. Now we're bull flagging, basing off, waiting for that 88 to catch up. AMC looks the same. Bull flag, waiting for the 88 to catch up. Volume looks better. It's decreasing bear volume instead of decreasing bull volume. RSIs look the same. AG. Nothing interesting. Oh yeah, there's this one that I really wanted to cover. UWMC. Look at that volume pop. Oh Jesus. Pre-market is trading up at 12.16. Wow, completely missed this one. Holy. Congrats, UWMC bulls. Jesus. Nice volume. Very nice volume. Very nice bull volume. Little bit of an upper wick. Didn't really justify, based off of this, didn't really justify the huge gap up we're seeing. This is now a 34.72% gap. Congrats, UWMC. Completely missed this one. Guess I should be checking this more often. Yeah, UWMC, huge bull volume pop out of on the daily, the biggest. Now today, when you're seeing a 35% gap up, make sure to take some profits. You know, you don't have to be all out. But based on this kind of gap up, personally, I probably would be taking at least like 80% profit. Let the remainder of that 20% be a free ride. We are gapping up into this key resistance. And I imagine if we look back right before the market opens, it probably would be lower. 1232. If we get past that, next one up would be around 1311. And then 1360. But yeah, let's remember that. 1227 right now. Wow, congrats. BB. Still bearish. Obviously these don't apply anymore. No exciting volume. Okay, so this is kind of interesting. Slightly increasing bull volume, decreasing bear volume. So it looks like we're basing off, similar to GME chart before the pop. There could be a good entry around here. Easy stop too. 963 is your stop. So $1, 10%. I will wait for it to come back down a little bit more. Might not even be $1. 984 would be ideal first entry. Nokia looks weaker. Basing off decreasing bull volume, decreasing overall volume. Nothing too exciting on Nokia. FF. Choppy chart. Doesn't look to go anywhere. It's just been basically sideways action since April 2011. So unless you're looking at shorter term plays, this one doesn't really justify any longer term plays. We can see that there's let's do weekly, that'll be easier. Excuse me. Try holding it in. Didn't work. Alright, so we actually didn't even come up to this trend line. And now we're rejecting from it. So, chart still looks weak. There's a key zone down here. So it's a descending triangle overall on a monthly, this could take very long to play out. We lost the $9 key support slightly, got bought up right away, and yeah, this could take a very long time to work out. And looks like NAS bear flagging is confirming right now on the 5-minute. Wow, look at this. Pre-market, bear flag, confirmation, bear flag, confirmation. Bear flag didn't even touch the 5-minute, 8, confirmation, bear flag, and now we are confirming again. However, this time right now we are forming a bullish divergence on the 5-minute, so would anticipate a little bit of a bounce from here. Likely seeing that bounce right now actually. But remember, trend still in bear's favor. Ideally, you want to see a hold of this GP. If this 5-minute bullish divergence works out decently, we could see a hold of the 0.5. Yeah, we held it on the last candle. Gonna have to see this candle turn green. Right, let's see if there's. I went through the Wall Street bet ones. PLTR, FF. Now this is an interesting ticker. Nope, not so much. Just choppy action. Okay, this is a little bit more interesting. Potentially huge upside. Big bullish volume pop. Confirmation. Bull volume still outweighing bear volume. And we're basing off here as well. I don't see a key zone though. Yeah, even though bull volume are outweighing bear volume, this might be a hard ticker to play. Struggling to find key zones. And we are trading under the trend line. Key to hold would be somewhere around here. 221. It is a penny, or can't really call it a penny stock. It's a man. All right, let's do this. This would be key to hold. I'm thinking more downside though. Watch for the volume. Market is weak. Jeez. Be careful on your entries. I think that's it. Yeah, it's not too much to cover. Not too much to cover today. Quick recap. Market 4-hour still in bearish trend, and I do apologize for the messy chart. When you see my charts messy, or if your own chart is messy, that is choppy action or bearish action. You know, you can clearly see lower low, lower high, lower low, lower high. Now we could be looking at a lower low into this next GP. So be patient on your bull entries unless you're playing bear plays. The reason why I call this chop is bears generally pull back a lot faster. If you look on the daily, you see stairs up, elevator down, stairs up, elevator down. This is a clear example. Stairs up for a long time, elevator down. Stairs up for a long time, elevator down. So percentage wise, if you were to do a comparison, the bear action percentage pullback will always be faster than the bull action. However, this time is, even here you can somewhat see it. This is a slow grind off, and then bulls bounced stronger versus the bear action, but then the real bear action came in, and then bulls bounced stronger again, and then so it's like a controlled sell-off. So be careful on it. A lot of times I'd rather see like a quick sell-off like this, because then the bounce is very decent. But this time it's more like a controlled sell-off. Bullish bounces have been really decent, but there's no volume. Look at the 2 days of bull action that we had. 0 volume. So be careful on your bull entries. And I guess that's it for today. Thank you guys for watching. Hope you guys enjoyed the video. Don't forget to give a thumbs up. If you're looking to build that pot of gold and enjoy the content that we provide, please consider subscribing to our channel, where we provide new videos daily. Also, check out our website at totalcontroltraders.com. We offer a 7-day free trial to our chatting platform, where our trading ideas are shared and charts are reviewed live. Hope you guys stay safe and be in control. Thanks for watching. I will see you in the next video.